Oh my gosh, here, the IRS. Everyone loves the IRS, right? So what are the flags? I know the IRS lists, I don't know, maybe 10 or 15 or 13, whatever items that, hey, these are flags. What are some of the flags that you got to watch out for that people want to get really massively aggressive on?
Yeah, that's a great question. And in this day and age, you want to make sure that you're not doing anything by the seat of your pants. You know, we've worked and seen boutique firms, especially in the R&D world. I know you mentioned that from my background, they're just taking frivolous positions or not substantiating, things. And same thing with the cost seg study. You want to make sure, the IRS is not really questioning um, whether you're doing a cost seg study, right? Basically, they want you to do a cost seg study, but they want you to make sure that you're doing it appropriately. And what that means is,
Yeah.
how is the study prepared? Is it properly documented and implemented? That's that's the key when it looks at the IRS. They want to see, call it an engineering based cost seg study. They want you actually looking at the detail, doing what's called takeoffs, basically looking at blueprints if it's new construction. They want you to do a physical inspection. You know, common compliance failures are spreadsheet only, aren't,
Ah,
sorry, cost seg
yep.
study. They're like, okay, just we'll put together, or say rule of thumb, I know you're a retailer, and traditionally we say 30% of it's going to be short life property. And then what I've also noticed, some providers don't look at land truly for what land costs, because unfortunately land is not a depreciable item from a tax.
Yeah, yeah,
And then, you know, if you have to allocate a certain portion, let's call it 10% of $1 million property, let's just say for simple math, that it's rural in the rural part of the state, you might say 10% is still land. But obviously, if you have a medical facility in Midtown Manhattan, that land value is going to be pretty pricey. And so you need to say, okay, you know what, 40% really goes to land. Now you have 60% to work with. So it's things like that that could really draw scrutiny from the IRS. I mean, I always
yeah,
tell business owners that when you look at doing a cost seg study, basically make sure it's engineering based with site inspection, component level documentations, good citation of the tax law, conservative, defensive classifications. You can't tell me in a building that's not
yeah.
really dedicated for like a server room that you have an HVAC that you can deduct depreciate over 5 years. That's 39-year property. You want to
Yeah.
have a full
Wow.
basis reconciliation. So all your cost accounting says, okay, this is what's on my trial balance. Here's the true basis of the property. It lines up. If you're, doing a back year study, a look back, as you mentioned, if you hadn't done it in real time, a proper completion of the application of the form application and changing the accounting method for 3115, then put it on the tax return. You could do all this great work, but if you don't put it on the tax return, then you really haven't done anything, right?
Yeah.
And
It-
sometimes you will have to make,
Document, document, document.
correct, exactly. And the last thing I
Wow.
would say, clear audit trail. So in the event this gets challenged, we like to do a pretty robust project here from a CLA perspective. We'll do a quantification. We'll get all the costs. We'll get you, and we'll also do a full report with basically do the right citation of the tax code, any case law. It basically says, okay, this is all the property, and this is why you can qualify. As I said earlier, the IRS does not, say you shouldn't do an R&D study. I'm sorry, a cost seg study. They want you to make sure that you're doing it copacetic.
Yep. Oh my gosh. Wow. I mean, I'm taking notes as you're speaking. There's so much information here. Wow. That's a lot of ground. That's a lot of ground. And it's the great information was one, if you have a business and you own a building, small or big, get a cost segregation study. Two, if you have a building, you've had it for a couple of years, take a look at it. You may still be eligible. document what you're doing, have the experts like yourself walk them through the process, have that audit trail. And again, why wait for 39 years when by that time the business owner could be dead, right? And,
Yep,
and the other alternative that you said, is cash flow. It improves cash flow, which is
absolutely,
unbelievable. Unbelievable.
exactly.